It's not about picking stocks. It's about picking the right portfolio.
It's often said markets are forward-looking. In your experience, how forward-looking are they? Do you find markets begin to trade price in quads at certain intervals in advance of the quad occurrence? From a cross-asset perspective, what quads have assets been trading in alignment to? I think the last part's an interesting question because if you to your point, we've been talking about this a lot, but if you kind of separate out tech or a handful of big cap tech stocks, a lot of the assets have actually been trading during these quad fours like we would expect them to, but you have this sort of dynamic out here that I think is everybody's eyes are looking at or it's confusing them. But I think in general, if we look at global markets, commodities being a big one, et cetera, they've acted kind of as we would have expected for the most part. And even from the top of the cycle, even tech has acted like we would have expected. But
yeah, so if go to slide 5, we're using some foundational slides here today. Slide 9 and slide 5 are critical. Because one is the signal, to your question's point, and one is, of course, the cycle. The signal, to answer it plainly and specifically, yes. Market, that's why my signal front runs quad shifts. So again, it's signal to quad, it's not quad to signal. So again, signals front run quad shifts. So to Jonesy's point, your starting point should be right there. That should be, if it's the US growth cycle or US stocks, that is November of 2021. Okay? Now I can go back and I can tell you that the peak of this, if you use a different color and you say something like this, you could say that the peak of this cycle, to Jonesy's point, on CRB or commodities was Q2 of 22, right? This is for equities. This is so again, everything has its own peak of the cycle. November 2022. What also peaked? Credit. Credit peaked. Everything peaked. Crypto peaked. All these things peaked in this one. So currently, so you can have from the peak of the cycle. You get the first part of the bear market is this. This was phase 1. That's January to June of 2022, right? We nailed that, right? Doesn't mean in the meantime, the whole way down, everyone's like, I want my bubble back. I want to go back here. I want to go back here, right? But that's happening, right? Currently, we really don't get. While you've had, like to Jonesy's point, 7 stocks that have gone up. The Russell 2000, when it got, let's say, to its low point here. It was minus 30, and currently today it's like bounced to minus 24. That's the Russell. That's a broad definition of US stocks. That takes out the 7 stocks. I'm not saying that the 7 stocks didn't happen. This AI narrative and what NVIDIA reported did happen, right? That's not the economic cycle. That's an innovation at a company that we'll see if that plays out over time. But that notwithstanding, CRB Index. If you go back to this one here, this thing didn't even bounce. In the month of May, it was right at its cycle lows. U.S. retailers, right at the cycle lows. Regional banks, right at the cycle lows. You got a lot of things that aren't doing anything remotely different. So when you ask the question that way, signal to economic quad, that's the answer. Commodities, credit, currencies, single stocks, obviously single sectors that I just mentioned, the fur. Well, the most obvious thing to do, like within the fur, for example, is industrials have bounced. Now that's the most aggressive bounce back, a little bit closer to up in here versus its highs. Well, that's a gift. You'd be shorting industrials with both hands here, right? So I think, when I look at everything, I always have this sine curve emblazoned in my head. Always have, always will. There is no better way to do macro than that. Now, there's a lot of things you can say in the very short term, because unless you expect me to be Nostradamus and predict what Jensen's going to say about NVIDIA, then you have the wrong expectation of me. I am far, far inferior to that expectation, okay? But I am consistent in staying with the process, and I guess that's the point, Jonesy, is if you've been doing this for 24 years, you stay with that process. If you've been with us for 24 months, I don't know, you got a lot of baggage still, right? Are you really a full cycle investor or not? Or are you a chaser? You have FOMO. Oh, this guy's up year to date. Well, he was down 30 last year. What is he up in the aggregate? He's not. He's just trying to get his bags back, right? So, imagine he was long crypto. which a lot of your friends were, admit it, those aren't coming back. Okay? So, like all the kind of exotic polka dot coins and stuff like that. So this, I think, Jonesy, is number one, the answer to the question is yes, markets signal on a trending basis. Again, within a trend, this is what also happens, don't forget, on the way down, and again, at the cycle low. I have a long history of this because I'm the only one who called 08 and the turn in 09. April of 09, X marks the spot. We had a reacceleration. Let's make it green. Hedgeye went bullish. I had all the patience in the world. I had Warren Buffett buying in October of 08. I had everyone yelling at me on Wall Street saying, who the fuck are you? You Hedgeye, all your research is in black and you have like greasy hair. Like, I had everything to get through. You don't think I'm going to get through this one? In between here and here is the opportunity to risk manage. It's also the opportunity, the upside down of that is to buy gold. Okay? So in this spot is where I really start to take on the adversity and start to get my next wave of success. That's very typical of our process. But don't confuse other people's concerns or questions with our lack of discipline in executing on that process.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.